and gentlemen, we are the team of the Faculty of Finance and Banking from Bucharest, and today we present you our investment recommendation for the Bucharest Stock Exchange, the only capital market operator from Romania. Our analysis leads us to a sell recommendation based on the following factors: a weak demand and supply, an unpredictable economic environment, the profitability below the peers, and the CCP project which is too expensive. On the next slides we present you our reasoning which is behind our analysis and sell recommendation, and now we'll continue with the FABBV business case.
In light of this market condition, the FABBV management has created a strategy with the following objectives: grow the FABBV business, improve market liquidity, and increase the FABBV share price. In order to achieve those aims, they have envisaged the following measures: grow the number of IPOs, especially those coming from private entrepreneurial business, launch the central counterpart in order to build a derivatives market, increase public awareness in order to create a strong local retail investor community, and gain emerging market status in order to attract new institutional investors. Our corporate governance assessment has yielded that the FABBV management has few significant corporate governance issues and that it is keen on implementing its strategy. However, in order to successfully implement the strategy, the main obstacle is not the quality of the management, but market challenges that we'll explain in the next slide. On the supply side, it is the low offer of investment opportunities, especially the lack of growth stocks with high market turnover and the still high market concentration in financials and energy stocks. On the demand side, the low level of financial education and high risk aversion keeps many potential retail investors away from the market. Those sentiments of retail investors will be explained in the next slide.
On the demand side, we have conducted an independent survey on 250 respondents. As can be seen here, only 12% of them have a trading account on FABBV. Even though the market provides a good return on investment, according to the same survey, the respondents presented the following reasons for not investing on FABBV, the main one being the high volatility and the risk associated with the capital market. However, the major investments on the Bucharest Stock Exchange are made by institutional investors, and as can be seen here, their investment decisions are mainly based on macroeconomic factors, which will be more explained in the valuation section. On the supply side, Alex mentioned before the low investment offers. This might be a result of the company's financing policies. As can be seen here, the bank loans were almost 20 times higher than the IPOs and the bonds issuance attracted by FABBV. And this is a matter of opportunity costs, because a company would rather pay a higher interest rate than accepting all of the requirements asked by FABBV for listing and post-listing.
Even that the FABBV strategy is very well developed, as Alex presented, there are some traits that could observe their plan. The most important being the macroeconomic outlook and the competition. Regarding the macroeconomic outlook, we speak about some factors. Firstly, the actual context of the rising inflation in the Romanian market, the level being over the one of the EU average. Secondly, the actual context of depreciation of the national currency in report with Euro and USD, that both the problem of inflation and the one of exchange rate could affect the real yield earned by the national and foreign investors. Next, we will speak about the problem of the economic cycle and the idea that starting from 2017, Romania re-entered in a downturn slope regarding economic growth, and as we know, the stock exchange represents a barometer of the national economy, and in this term we expect that also the FABBV activity to go in the same direction with the economy, having a low performance than before. Also, we will speak about the demographic problem and the idea that Romania have an unfavorable age structure of the population, as we can see in the graph, and this could affect a lot the capital disposable for investment for private pension funds, one of the most important participants in the market, and also the one of the retail investors. Next, we speak about the other risks, most important one from the policy area, the tax policy area, and as we saw at the final part of the last year, some changes in this area could affect a lot the FABBV activity, because after the emergency ordinance 114, in just one day the BET index fell with more than 11 percentage points, which was a lot for the FABBV activity. Next, we will speak about the competition part, and it's need to know that the FABBV management declared that they want to follow the Warsaw Stock Exchange in terms of development, but as we can see in the table, BVB in terms of number, it's still far away from the point when Warsaw Stock Exchange become an emerging market. Now Luca will continue with the financials and valuation.
Even if BVB revenues increased in 2018 by 4.7% year over year, if you take a look at the 5-year historical CAGR, which is around 0.1%, we see that BVB showed no growth over a longer period. For the next 6 years, we expect an increase by 5.5% historical CAGR. Based on future IPOs and achievement of emerging market status. However, the forecasted increase in revenues will be not sufficient to boost operating margin, as the upgrade to emerging market status will require additional staff. Therefore, we expect that operating margin will remain around 23%, but below its peers. In terms of valuation, we set our price target at 18.4 RON, implying a 12.4% downside potential. The main valuation method used was DDM, and the result was cross-checked with relative valuation. We took as the main DDM assumption the growth rate of transaction, which we used in order to forecast the growth rate of each category of investor from local capital market. Also, we included in our DDM assumptions the base case of CCP. If you take a look at this slide, CCP seems to be expensive. The internal rate of return is below cost of equity, and even if you take into account synergies, CCP doesn't create value for investors. This is evident in the DDM table, which shows that in 2022 will be a major outflow for BVB shareholders to finance CCP project, which will not be compensated by future increase in net income from emerging market, gaining emerging market status, future IPOs, and additional net income, including synergies. In order to identify the most important factors with impact on BVB stock price, we use sensitivity analysis. This analysis shows that the average commission has the biggest impact on BVB stock price. To further cross-check our price target, we use Monte Carlo simulation. This analysis shows that simulated prices are distributed with 80% probability between 50.5 RON and 21 RON, leading us well to a sell recommendation. Our relative valuation is based on 6 stock exchange companies listed mainly in CE region. Given the market's structural differences and discrepancies in terms of profitability and operating margin, we consider that BVB multiples are comparable with first quartile. This analysis leads us to a price value of 19.2 RON, confirming as well the overvaluation of Bucharest Stock Exchange shares.
To summarize, BVB faces a lot of threats, and mainly from outside of the business. Moreover, the main risks are related to the state policies, and the highest issue here is that these measures might have a negative impact on BVB's activity, as could have been seen last December. To conclude, therefore, we issue a sell recommendation based on the weak supply and demand, the profitability below the peers, unpredictable economic framework, and the CCP project which does not create value for its investors. Thank you, and the floor is open now for questions.